Well, good morning, everyone. How are you this morning? Hang on here one second. Thank you for joining us in our DTS open house. My name is Eric Senft. I'm going to be your host here this morning. And Tom's already pelted me with a bunch of questions, which I'll get to in just a moment for you, Tom. Allow me to give you a very quick tour of what you're looking at here. This is for those new to the room. You're looking at the Diversified trading system, and it's diversified because we're looking at the market from three different points of view. We actually have three different tools. So we have a tool here on the top left. This is the Hawk Scalper. Obviously, this is for scalping signals when the market is in a scalping environment. Here in the top right, we have the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. That's the Raptor. The Raptor is actually kind of like a hybrid. It's a blend of the other three birds. It incorporates elements of the Hawk, the Falcon, and the Eagle all into one. All the signals, regardless of the tool, develop the same way. First off, you're going to get a warning dot along with an audio alert. Then when the signal is complete, you're going to get a triangle and a hash mark. That tells you that you have a complete signal and it's time to make a decision about the signal. Now, I should point out right now that not every signal that prints is what we consider to be a high probability signal. For instance, here on the Hawk Scalper, signals that produce on a yellow bar, we avoid. Because when the system prints a yellow bar, that's a very neutral bar. It can go either way. It's not a high probability signal. Contrast that with this signal right down here. This is what we call a first micro-macro cross signal. Very high probability signal. We've got the thin line, that's the micro line, crossing the fat line, that's the macro, and it's the first signal where everything is in sync. So we have green bars, green trend lines, a green filter, as well as a green signal. So that's the high probability signal. And you're going to see a lot of that. You're going to see these signals where we're looking for confluence, essentially. We're looking for things to sync up. Before I get too far along as well, let me mention I'm looking at the NASDAQ here. I'm also following soybeans and crude oil on my other monitor, but I'm happy to look at any market which is of interest to you. I'm sure there's probably a couple currency traders or an e-mini trader or two, so please don't be shy. Send me your questions, send me your market requests, and I'll do my best to accommodate you. All right, so as I said, okay, Alvin's asking to see crude oil. Absolutely. Well, here, what I'll do is I'll load crude oil on here. We'll just let that load up. And then I'll give you the tour. And Tom's asking a bunch of questions here about the Raptor and the DTS signals, which I'll get to in just a second. So we'll let crude oil load up. Today, of course, crude inventory. So we'll look at the crude inventory a little bit later. So here's crude on the Hawk Scalper, and looks like the overnight fairly quiet. The London session opened right about here, actually, produced a first micro-macro cross signal. This is on the Hawk Scalper. Produced a signal to sell. We had a failed red bar buy signal here. I know that makes no sense to you, but it's one of our signals. So you could have shorted early if you were watching during the European session. Other than that, North America opened right about here. We already had what we call a macro pullback signal underway. And now it looks like we're waiting for a consolidation signal on crude oil. So crude making a nice progression, lower, higher, Let's take a look here at the Falcon Swing Trader. Shows you the same thing. We did get a double dot signal down here. This would have been a little bit difficult to take. The first real signal was right here, just around the North American Open, which is our basic trend change signal. So you had a signal here out of the open for crude oil to buy it, and I do believe that hit our high probability profit target. Yes, it did. These horizontal lines that you see here on the crude oil chart here with the Falcon, this is actually a system add-on. What that means, it's a standalone. You can put this with any chart. It can be a 5-minute chart. It can be a tick chart. It doesn't have to be a DTS chart. This is the ultimate support and resistance suite. No, they are not pivot levels, and no, they are not Fibonacci retracements. They're actually much better. This is yesterday's activity, and you can see how the market kept responding to the resistance lines, came down, hit the primary resistance, hit the resistance line, came down to the median line, came down, bounced off of secondary support, came back to the median line. So you got an assortment of 21 support and resistance lines that are forecast for today. The gold line is the median line. That tells you you're right in the middle of the assortment. And then we've got primary resistance and primary support just above and below it. These three lines kind of set the tone for the day. If the market's above here, gets above here, it tends to be bullish. If it gets below, it tends to be bearish. That's just kind of a very loose rule of thumb. Take a look here at the Eagle now for crude oil, and haven't really gotten a signal. We got a signal late yesterday. Sometime during the Asian session, we got our trend change signal, or a rule of three, another trend change signal. But these all occurred during the, oh, no, sorry, my mistake, late in the North American session. The Asian session was down here. So just before the market closed yesterday, we got a little bit of a trend change signal, and they plotted lower through the overnight before they reversed, and now we're waiting for a possible trend change signal higher. But no signal from the Eagle just yet. Now here on the Raptor, let's see. Well, we had a double pullback signal here on the Raptor. So the double pullback shows us the market moving into this cloud twice. This cloud you probably recognize from the Eagle that I just showed you. Remember, the Raptor is a blend, a hybrid of the other three birds. So we've got this trading cloud that's borrowed from the Eagle. The whole Eagle trend trader is actually programmed here into this filter. And then the Hawk generates some of the bar colors, and the Falcon helps with the signal generation as well. So we've got a double pullback into the cloud, and we expect the market to reject the cloud and come out. So we did produce a signal right here. That's one of our Raptor signals. It turns out that this was a soft edge buy, but it would be nearly impossible to take real time when this was developing. We don't have our test of the extreme, and I'll explain that in just a moment. So now here on crude, we're looking for what we call a cloud crossover signal. So the clouds have crossed over, the market is retreating into the cloud. We expect it to bounce out of here now. So we expect it to come into the cloud, come out, produce a signal, and that will be a buy signal for us if it unfolds that way. This tool here, this is another one of these system add-ons. This is called the Geiger Counter. The Geiger Counter is essentially a tape reader. So you get a visual of the time and sales of the order flow. So you get the order flow right here, the current order flow. You can see it's fairly neutral. Our needle is white. If it gets more bullish, it turns green. If it gets more bearish, it turns red. Then you have this nifty dial around here. This dial is quite helpful because if you see the dial pull hard to one side and hold, then that shows you the buyers or the sellers trying to chew through those orders. But at the moment, it's fairly neutral. You see the sellers are trying, the buyers bring it back a little bit. It's fairly quiet. I expect this to liven up a little bit as we get into about another 40-45 minutes from now. You see how it's tried to pull over and hold, and now it's trying to do it the opposite way? Yeah, we'll show you more of that. All right, so there's crude oil on those tools. I'm just going to dial up the NASDAQ again. All right, so a couple questions here, and we'll do my best to get to everybody's question. Colin is asking, is that an Ichimoku cloud? No, it's not, Colin. I know it looks like one. It's not. We didn't think of that when we actually designed it. We thought it looked kind of cool, but no, it's not an Ichimoku cloud. It's a trading band that we use for our directional bias. So here on the Eagle, when the band is flipped this way, we're more bullish. We're looking for buy signals. And when the band, oh, well, you can see there's a pretty effective trend in the NASDAQ. I'm trying to find a downtrend, but I think I'd have to go back a few days. The NASDAQ hasn't really tailed off much. Oh, there's a little bit of one. Yeah, so when the band is flipped this way, we're looking primarily for sell signals. Hard edge bounces, in particular, when the market encounters the hard edge, we expect a reaction. This green bar sell that you see right here is a very high probability signal. The market retreats into the hard edge, produces green bars with a sell signal. Here's just a regular hard edge bounce right here. Market drifts into the hard edge, bounces out, produces a signal. So whenever the market encounters the hard edge, we're always looking for some sort of reaction, some sort of signal. And right now you can see the band getting all twisted up like a rope. So that also tells us that the market's kind of neutral, at least from a trend point of view. That's why we have different tools. See here on the Hawk Scalper, we actually produced a first micro-macro cross signal right here. Micro line crosses the macro line, first signal where everything is in sync. We have red bars, red trend lines, red filter, and grabbed a nice little scalp out of that. The tool I'm using here on the right-hand side, and I'll show you more of this as the morning goes on, this is our trade manager. This is perhaps the single most important piece of trading equipment you can own as a trader. And no, I'm not just saying that. This tool here, when Adam first told me that he wanted to build this, I couldn't envision it because the only thing similar to this is in massively expensive and powerful computing systems on Wall Street. This essentially does the exact same thing that those programs will do for you. It controls your risk. You can cap your risk right here. Currently I've capped mine at 2% of my trading capital. You can set profit targets, as many as 3 profit targets and a runner. You can preset your objectives. Currently I'm all in, all out at 10 ticks. It's the time of year where usually we don't see huge running markets, so I tend to go all in, all out on target. We also have 16 different stop strategies to choose from. And the trade manager will automatically manage your trade according to these stop strategies. These are all fully customizable. If you want to make them a little bit more conservative or perhaps a little bit more aggressive, you can do that. And there's 16 of these. And as I mentioned, they're all customizable. And so the trade manager will follow the trade, these blue dots. So that literally frees you up. A lot of people are never really clear on how they should manage a trade anyhow. You know, you buy into this first micro-macro cross down here, and the market shoots up and it's like, uh-oh, what do I do now? Especially when the market starts to peel against you. Well, if you want, you can just let the trade manager deal with it for you, and the stop strategy would help you in until you got stopped out right here. So it takes a lot of the stress out of managing your trade. You can see here now we're back into yellow bars, so the NASDAQ off limits for a moment. All right, so now to some of these questions. Tom's asking, Eric, can you highlight some of the signals that traders should not take as they occur on your DTS and or Raptor charts, especially since the algorithms are producing the signals? Yeah, no problem, Tom. Now, just to clarify, let's get this over here. I'm going to show you the high probability signals, and I'm going to show you that it's really not that difficult to follow. So here, for instance, with the hawk, the scalping tool I was just showing you, these are the 5 high probability signals that we concentrate on. So we got the first micro-macro cross, the macro pullback, the 4-arrow consolidation, the post-consolidation pattern, and then the red bar buy and green bar sell. The falcon is similar. We have our trend change signal, we have our late filter entry signal, we have our trend line touch signal. All right, those are all high probability signals that we're going to focus on. So Tom's asking, can you show me the signals that you should not take? Absolutely. Well, it pretty much amounts to everything that's not a high probability signal. So here with your hawk, anything that's producing off of a yellow bar, unless it is a 4-arrow consolidation. The 4-arrow consolidation is the only pattern I will take off of the yellow bar. In fact, I can demonstrate this one here. We're going to get a 4-arrow consolidation, and let's see, I'll set it up like that. So we've got 1, 2, 3 signals. We've got a warning dot, so I know if the market continues lower here, we're going to print a 4th signal, and that will be my 4-arrow consolidation signal. It's not on a yellow bar, but in this case, the yellow bar does not negate it. I don't take follow-up signals either. So for instance here, this is the first micro-macro cross. This next signal, even though it did work out, these next 2 signals, these are not a high probability signal. So I actually avoid those. Even though, as I mentioned, they did work out, because for every one of those follow-up signals that does work out, I can probably show you one that doesn't work out. All right, well, we'll just let that signal, oh, there they go. I was going to say we'll just let that perk along for a little bit, but come on, get down here. So normally I will run to our high probability profit target, and I've got a break-even stop and play. I'm going to let this trade try to run out a little bit so that I can show you the trailing stops. All right, but just be aware if we get down near these lows, that's where our profit target was. Okay, so now here on the Falcon, what kind of trades don't we take? Well, essentially, it's kind of the same thing again. We're looking at signals that don't fall into our high probability category. So here we had a early trend change signal. This came during the wee hours. So that's a signal I would take. This was just your basic trend line touch signal that probably did not get to its profit objective, but may have given you a second chance to adjust your stops a little bit. Yeah, it came up short of your profit objective, but you see when the market started rallying again here, this is a good time to start adjusting your stops. So you can take your stops from down here and you can start to bring them in a little bit. Note also when this signal printed, we had a major downtrend going on, right? So inherently, this is more of a counter trend signal. You need to be careful anytime you take a counter trend signal. But when the market starts going in your direction a second time, that's a good time to start rolling your stops. And in this case, you would have been stopped out here. So you still would have been tagged for a loss, but not for the whole amount, which is nice. Oh, by the way, this is something that I don't think any other trading room moderator will ever show you, and that's a failed signal that did not reach its target. The DTS system is very good, but it is not 100%, I'm sorry to say, which is the other reason we use the trade manager here, so that if we do hit a losing trade, we never lose more than we can afford. Right? This amount that you saw me put up here, this is 2% of my trading capital. For you, it may be more, it may be less. If this number is too dear, well, you can dial that down. Let's make it 1%. Or if you're not sure about how the trade is going to set up, you can dial down the risk, or you can go to manual mode, and that defaults to this quantity up here. So you can just throw in a onesie and see what happens. All right, so this tool right here, as I said, incredibly powerful, and most importantly, it keeps you from blowing yourself up, because most traders that I've come across during my coaching sessions with them, with the one-on-one coaching that I do, they risk far more than they can afford to lose. All right, so we're getting a late filter entry signal here now on the Falcon. It is not complete. I need to wait for the filter to come into sync. And I know that if this bar finishes on the low, that will bring the filter around. So I could perhaps set up a trade like that. Or maybe, to be safer, I'll cover it above there. So there's a possible signal on the Falcon. The Eagle. Now the Eagle can be a little bit confusing to people because it's a trending tool, and you're looking at these signals and you're saying, well, what about these signals through here? Well, again, we're focusing on the high probability signals, right? So we've got like our trend change signal. This one occurred right here. And again, I tend not to get too excited about the follow-up signals, so I tend not to do too much with that one or too much with that one. This one is actually a soft bounce. You could go with that one. It's not a trade I highlight very often. Because we have different tools, if you happen to miss one of the signals, there's probably going to be a follow-up signal on the Hawk or the Falcon or the Raptor, for that matter. So I don't tend to get too excited if I happen to miss a signal. But to answer your question, Tom, I tend to concentrate just on the high probability signals and let everything else go. Here on the Raptor now. See, the Raptor's a little bit of a mess too because our cloud is all over the board. We're not really getting much of a trend. So we've got a market that's pretty much in a sideways trading range. When you open up your chart and it looks like this, where the market goes down, the market goes up, the market goes down, you've got more than two trends on your chart, this is a sideways market. So sideways markets, you have to be a little extra careful. Perhaps the best thing to do with a sideways market is just recognize the range and allow the market to get clear of this range. So let it break out, let it show you that it can stay out, and then look for your signal. And you will get a signal. Same thing to the downside, let it get clear, and then look for the signal. Alternatively, and your DTS and Raptor systems aren't going to produce signals for these, but you can look to sell the top end of the trading range, so you can look for a chance to short here, or you can look to buy the bottom end of the trading range, stop it, and you can look to buy there. All right, so that's another way to address it. But right now, it looks like we've got pretty much a sideways market on the go. So with your Raptor, what we're looking at now is a possible, yeah, nothing. Possible nothing, sorry. We did get a cloud cross over here that may have produced enough for a scalp. Really nice cloud cross over here. So the clouds cross over, the market retreats into the cloud, it comes out, produces the signal, and you had several chances at this one. You could have gone on as early as this one here. This one is probably the true cloud crossover, because this one the market actually retreated into the cloud and came out. But like I said, 3 or 4 chances to get on board that one, and what a nice trend. Tom's asking, Eric, can you show the Raptor chart and signals a little bit more? It seems you're particular to the DTS charts. You don't have to, and I would understand why. No, not a problem at all, Tom. I just try to show the charts. Well, I try to show whatever opportunities there are. The thing with the Raptor, excuse me, the thing with the Raptor is because it's a hybrid, it tends to sacrifice quantity for quality. So when you have 3 different tools, it's almost like, think of those all-in-one screwdrivers, right? You've got all the bits in the handle. And yeah, it's a Phillips head screwdriver, and it's a Robertson head screwdriver, and it's a Torx head screwdriver when you want it to be. But is it necessarily as good as a Phillips head screwdriver? Let's say you need a real long Phillips head screwdriver to get at an awkward screw. Well, for that you need a specialized tool, right? Your all-in-one isn't necessarily going to do it. If you have a Robertson head screwdriver and you need to, pound at it with a hammer, well, a specialized screwdriver, you can probably hit that handle without it shattering, like one of those all-in-one screwdrivers may do. Terrible example, a terrible analogy, but you kind of get the idea. So it is, the DTS system's a little bit more specialized. So when the market's like it is today, where we're just kind of flip-flopping, going back and forth a little bit, we may get an opportunity here on the hawk, which is one that we're nursing right now with our 4-arrow consolidation. But that doesn't necessarily mean that we're going to get a signal anywhere else, right? Because why? Well, because, hey, the market's not in trend mode, so why should we get a signal on the eagle? Or maybe the market's not swinging. We may not get a signal on the falcon. And yes, the Raptor is a hybrid, so it is a little bit more responsive. We should get a signal here. See, there's our, you could consider this a cloud crossover signal, and here I'm just going to hop on this to make a point. And again, I'm going to delete my profit objective just so I can try to show you how these tools work. So here's a cloud crossover signal, if you will. Well, I guess I better go to stop and play. And I'll try to let the market ride out this first swing. So we've hit our high probability target. We're going to let the market try to ride out this first swing, and then I'm going to go to a different stop strategy, and I'm going to show you how the trade manager actually rolls the stops. Now, you may have noticed that this one is a little bit different than this trade manager. This trade manager has the risk component in the bottom. The one I happen to have here on the Raptor does not. The Raptor version, and this is not unique to the Raptor, sorry. I just happen to have this one on my Raptor chart. You can put this on any chart you want. You can put the Trade Manager on the Raptor. You can put this one's called the Trailblazer, on any of the tools as well. The primary difference between the two is the Trailblazer does not have the risk component built in. So you need to know your approximate position size so that you can set up your trades here at the top. So let's say I want to take one contract with a 20-tick target, and I'm going to have another contract with an open target. So one with a 20-tick target, one with a runner. I can set as many as 3 targets. I can set as many contracts here as I want. The idea is that you're not going to get yourself overextended, however. You still have all the stop strategies, but what makes the Trailblazer different, besides the risk component, is that you get the one-click entry system. So you saw me hit the sell market button here. I got my profit target, which I've since deleted. I got my stop, and everything's ready to go just like that. The reason the Trailblazer was developed is we had some DTS owners who were trading some very fast markets, and they said, you know, by the time I set up my trade, I get my signal, and I set my entry, and I set my stop loss, and I hit my submit order, the market's already run away from me. Can you give me a one-click system? Well, that's what the Trailblazer is. It's a one-click entry system. All right, here on the Hawk, I'm going to move now to a, oh, that's a little cozy. Let's leave it a little bit further back. Let's see, what else can I choose from here? Maybe the chandelier? All right, we'll go with chandelier. It's a demo room. Let me demo. All right, so I've activated the chandelier stops, and now hopefully the market will continue lower, and you'll see the Trade Manager actually begin to roll my stops down. So remember, our profit target was here, but I'm trying to be a little bit cute and roll my stops today. So regarding the Raptor signals, no, Tom, I'm happy to show you as many Raptor trades as you want. Sometimes you just need to remind me, because there may be a couple more opportunities brewing in some of the other tools. That's the only reason I tend to show some of the DTS signals more often, because sometimes there's just nothing going on. Tom's asking, what do you mean by test of the extreme? Now, test of the extreme is a term you'll hear me say a lot of during the trading room. The test of the extreme, quite simply, is shows us when a market is failing. It's a very powerful signal. It confirms that it's a good opportunity, really. So let's take a look at this one here, because this one's practically textbook. We have a market that's in a little bit of an uptrend. The market tops out, just happens to top out at our resistance line, comes down, and then tries to resume the trend. At this point, it is testing the extreme right now being the high of this current leg of the trend. Once this starts to fail, we have a pretty good idea that the market's going to try to head lower. It's probably going to break support and head at least a little bit lower. This is why these tests of the extreme are so powerful. This is one of the main things I like about the mean Renko bars that come standard with the DTS system. You can, by the way, use DTS on time-based charts and tick-based charts if you prefer. But I much prefer the mean Renko bars. When Adam first sent these to me to use, you know, I was a 5-minute chart trader. That's all I did. I looked at 5-minute charts, and he said, Eric, you gotta try these. These are incredible charts. And they are, because you can really see who is controlling the market, right? At this point, the buyers controlled the market. But once this happened, Now all of a sudden the sellers control the market. And we know this is a good opportunity to sell. So when we see that, we know we can take a trade or a short signal with a lot more confidence. So that's what a test of the extreme is, and it happens in all the charts. It happens here in the Raptor. See, we had a test of the extreme, and we came back with our soft edge sell signal right here. That's a high probability signal on the Raptor. On the Raptor, it doesn't matter if it comes off of a yellow bar. This is a high probability signal, and it must always, always, always be preceded by a test of the extreme. It's essentially a heads up that the market's going to go counter trend. Now, in order for a market to go counter trend, you must first have a trend, right? So here's the market comes down, goes up, comes down. All of a sudden, it can't continue any lower. It starts going the other way. In fact, it does it twice. You see, we have two tests of the extreme. In this case, the extreme is the low. And then the market comes back and produces a soft edge buy signal. That is our signal telling us that the market is probably going to reverse and head higher. And that's exactly what it did. All right, so very high probability signal to look for. Fairly easy to recognize, really. You just watch the market, you see that it's no longer able to resume the trend, then you look for the signal going the opposite direction. All right, so can I adjust my stops here? Maybe I'll go to chandelier also. Yeah, sure, let's do the chandelier. So you can preview all your stop strategies before you actually commit to them, so you don't find yourself moving your stop to the wrong side of the trade. I think we're going to see a little bit of a uptick here. I've been watching the Geiger Counter. You see we had quite a bit of buying come through here. Oh, we're pulling to the short side. Maybe we'll get one more move lower. All right. Well, we'll come back to that. So, looks like trying to run out the trade may not have been a good idea. Taking profit on target. That's what I like to do. Tom's asking, can you show the oil inventory deal that you sometimes highlighted? Absolutely, Tom. I'll look at crude oil in about another 15 minutes as we get closer to the inventory report. Tom's also asking, can you scalp with the Raptor? If so, can you illustrate? Absolutely, you can scalp. Oops, don't need to do that. So when you're scalping is really a matter of profit target. Ricardo, one of our Raptor owners, who was the guy who initiated the double band, is a big-time scalper. He likes to get in and out. So what he does is he will actually take any hard edge bounce and scalp it. So he'd be looking at, and that's why he has the double band as well. So he would be looking at a bounce here as a possible scalp. Didn't produce a signal, but he'd be looking for a scalp. Here's a hard edge bounce, so he'd be looking for a scalp there. Along with the traditional signals, you know, the cloud crossover signal. You had a couple more hard edge bounces. And that was about it. Now the nice thing, because the Raptor is a blend, you don't necessarily just have to scalp, right? Like, because you are going to get trend signals as well. Sometimes it's to your advantage to also have a runner in play on the Raptor. The Raptor is a tool where I will have a runner working a lot of the time. But yes, you can scalp. Hard edge bounces are the easiest ones to scalp. So the market comes into the hard edge, bounces out, produces a signal. There's a scalp signal for you. And that would have been enough to hit your scalp target. Tom asked what produces a high, or what determines the high probability profit target. 9 months of testing. Yeah, I'm not kidding. The tools were all tested for 9 months, and during that period, we determined the highest probability targets for each of the tools. A lot of it is traditional targets as well. For instance, when you're scalping, traditional scalp target is $50 per contract. Swing trading, traditionally $100 per contract. So some of those things are kind of industry standards as well. Good morning, Jim. Jim firing some advanced decline numbers our way. Pretty much an even heat today, 1351 on the buy and 1352 on the sell. So no real surprise there. The market very, very sideways. Oh yes, and let me point out the equivolume bars here, because while I was making a comment about the support, Jim probably typed in, especially with the equivolume bars. So when you see the market turning here, you see how we got this fat bar relative to the other ones? This is another system add-on, meaning you can purchase it independent of the DTS system. You don't need to have DTS for this to work on your charts. These are the dynamic equivolume bars from Indicator Warehouse. For those of you unfamiliar with equivolume charting, all equivolume charting does, it was developed by Richard Arms. Most of you won't know the name, but you may be familiar with the trend indicator. That was his baby. Mr. Arms wanted an easy way to incorporate volume into his charting. You know, a volume chart can be kind of difficult to interpret. So what he decided to do is, and he was charting just as computers were becoming a staple in the trading world, he developed a program that made the bars fatter when there was more volume and thinner when there was less volume. Pretty clever. What makes the dynamic equivolume bars unique is that they will work on any chart style. Most equivolume charts only work on traditional candlesticks. The dynamic equivolume bars from Indicator Warehouse will work on range bars, like the Indicator Warehouse mean Renko bars. They'll work on tick charts, they'll work on time charts, pretty much everything, except you know, those exotic charts like those Kagi charts or point and figure charts, but those are a different animal altogether. So when you see a fat bar like this and it failing to recover the high, you're pretty much clued in that the market's going to head lower from there. All right, so we're just hoping to see another little push here out of the cloud. We're getting the second part of a double pullback signal. We'll see if they come out of here now and produce a short signal, at which time you should see the stop start to roll automatically, just like magic. Tom asks, the targets can be adjusted though? Absolutely, Tom. You can preset your targets to whatever you want. Here on the Trailblazer, you can set them up here. On the other tools, you can change your objectives here. For instance, let's say you wanted to have, you wanted to take a third of your profit on 20 ticks, and you wanted to take another third, say at, I don't know, 40 ticks, and you want to leave a third on as a runner. So you've got a third, and a third. So now let's set up a trade. We don't have a signal, but we're just pretending now. So if you set up a trade like this, you can see you've got 8 contracts, a third come off at target 1, a third come off at target 2, and it does round down. Oh, no, sorry, in this case, it rounds up. Sorry, my mistake. And then you'll have 2 on as a runner, right? So target 1, target 2, and it's all automatic for you. So yes, it's very customizable. Now we just need the market to do something. That we haven't developed yet. We're still beta testing the magic mouse, where I can actually move the market with my mouse. See, watch, I'm going to pull it down. There we go. The market will now have no choice but to move lower. But the magic mouse, unfortunately not for sale yet. It's still in beta testing. Yeah, thanks, Tony. Tony says, just a reminder, crude inventory at 10:30. All right, so Tom was asking earlier about crude inventory. How do you handle it? And you can do this on any tool. I just pulling up the Falcon here because what I like to do on crude inventory is if the market has exhibited any kind of sideways trading range. Here, let's go over here. This is a much better look. Sideways range, obvious resistance, obvious support, the market trading right in the middle. Well, then I bracket the range. I use my OCO function, which I'll do here in a moment, to buy above and sell below, and then I'll just let the market bring me in. All right, so that's ideal. Unfortunately, we don't really have that kind of range here this morning. We have a market that's plotting a little bit higher. So there's one of two things you can do. You can still try to bracket the range, maybe buy above the primary or the secondary resistance line here on our support and resistance suite. Maybe short the support. Crude oil is so wicked, though. I don't know what kind of slippage we'll get. Or that's item number one. Or item number two is you can let the report hit the floor, and it'll probably, spike for 30 seconds or a minute, and then it will establish a range, and then you can bracket that range. So when the market's like it is today, you're probably better off letting the report hit the floor, let the dust settle, and then bracket it and see which way the market is truly ranging. Because we got a lot of kind of inside trading going on, a lot of sideways stuff. Okay, we got about another 10 minutes before we need to get more serious about that crude report. I see the magic mouse worked. I did manage to pull the market down. All right, here we'll just have to do it a little bit more so I can show you how the Trade Manager will automatically roll your stops for you. I hate manipulating the market this way for my own gain, but we just have to do it so that we can show you how these tools work. Come on down. Ah, they're stuck. So if I were in the room and we didn't take profit on target, I would be getting much more aggressive with my stops right now. I would roll them in above this high, or perhaps choose a stop strategy that was more aggressive. Oh, that's not it. Maybe something like that. But we're not in the room, so I'm going to try to see if we can ride out this last swing. There. Because you see what's happening here. The bears push down, the buyers push back. Sellers push down, the buyers are pushing back. This is really the seller's last chance to recover the market. If they fail here, the market will go higher. So that's why I would adjust my stops much tighter. And in fact, I think we're going to see a little bit of a rally here. The Geiger counter getting very, very bullish. See, our needle is green. We're stuck here to the buy side. Had a huge order flow go through here. Sellers doesn't look like they were able to absorb it. No, they're not going to let me demo it. Scoundrels. But we did see it coming. Well, maybe here on the crude inventory report, I can show you how the trade manager trails your stops automatically. It does, honest it does. All right, so I'm going to use the OCO function, and I'm going to bracket the market here. Now, when you use the OCO function, you need to be aware that these orders are live the moment you put them on your chart. So I tend to place them away and then pull them into where I want them to be. So I'm going to count on the resistance line here to keep me on the right side. I'm going to count on the median line to help keep me on the right side. And I should enable a stop. Let's give the market a little bit of elbow room here. Yeah, I think that'll work. Now what's interesting, or what I find interesting with the DTS tools, is how often they will catch the market direction before things like the inventory report. So we've got inventory report coming out in about 7 or 8 minutes time, and we're producing or getting ready to produce a late filter entry signal. So notice the filter went out of sync, is now back into sync. The trend line never changed color. We just have the warning dot right now. We haven't printed a buy signal just yet, but I would not be the least bit surprised to see crude oil rally out of the inventory report here. So there's the complete late filter entry signal. So that is a high probability signal for the Falcon. We'll see whether or not we get any follow through from that. All right, a couple minutes still. Let's see what we're missing here on the NQ. So the Raptor is still waffling, still inside this trading range. Now we may produce a cloud crossover to the upside, right? Cloud's trying to cross. waiting for the market to come in, for the clouds to bounce it out, and for the system to produce a signal. Then we know all our ducks in a row. With the DTS and the Raptor systems, what you see is not what you get. There's actually about a half a dozen algorithms working behind the scenes here that have to qualify before you even print a warning dot. So there's a lot of parameters here that have to be met before the signal even begins to generate. The tools have been stripped down, though, to make them easier to use. All right, couple minutes, so we'll just hang with this for another moment. Don't bring me in before the report. Get down here, come on. Get back to around 43. And then you can fake all those sellers into shorting and then reverse and head higher, just like crude oil usually likes to do. Throw a Geiger counter on here so we can watch the order flow. Where are you, Geiger counter? There. All right. Couple minutes, and we'll see what crude oil does. Pretty sideways kind of day, though. It's kind of been the theme for this last week. Yesterday, not a bad day. Early rally, and the market kind of went flat and then fell off in the afternoon. But at least it made some tracks. Not so today. All right, so we're back around 43. Not quite in the middle of the range, but at least not too close to my entry, and the inventory report should be out in about a minute. So note the Geiger counter. See how it's pulled here to the hard side or the buy side and was just stuck? That kind of shows me that there's a lot of buyers trying to chew through those buy orders. So we got buyers and sellers both taking positions early. Still onesie-twosie stuff going through here. Just the pikers trying to jump on the right side of the trade. And in a moment here, we'll see these numbers jump into the hundreds if it's a big inventory report. These are the folks buying their lottery ticket right now. It's going to go up. No, it's going to go down. Notice how balanced it is. And there they go. All right, nice little bounce off of the median line. See if they get through that primary, or they're through the primary. See if they get through the secondary resistance. There we go. Oh, hey, look at that. It actually rolled my stop. There we go. So you can see the trade manager rolling my stop based on my stop strategy. I should delete the break-even trigger just so you can watch it a little longer. So, voila, it works. Not that it's a surprise, but I finally got to show you how the trade manager will roll your stops up for you automatically. So the whole point is that you don't have to manage this trade anymore. You can put this on the shelf and you can go, look for another opportunity somewhere. You can say, okay, what's brewing in soybeans or in gold or the NASDAQ or the E-mini or whatever. But we'll stay with this trade a little longer. So the late filter entry signal does look like it put us on the right side of the market. Now that we're through here, I normally anticipate the market to move two zones. So I'm thinking 43.71 is a reasonable target. We'll see what kind of profit we're looking at if the market approaches 43.71. If it can get outside. So if you didn't trade the original breakout of the inventory report, now you have a range that you can bracket. So you can buy above here, you can sell below here. You know the current limit of the crude oil market. Yeah, I agree, Tony. Tony says a pretty calm crude oil report. Yes, it sure is. Do we got to watch natural gas to get that whiplash action going on? All right, so now normally I would, well here, I'm going to do it. Normally I would hold my stops a little bit deeper until I see the seller, or pardon me, the buyers make that other push, right? We're back here to this support, pretty much where the market broke out. Remember how I was telling you about trading ranges before? We look for the market to break out, retest, and then recommit to it. So I'm looking for that recommit part now. And that would be a good time to get a little bit more aggressive with our stops. There we go. So now they've recommitted, and we'll go back with our ATR stops. Sometimes it can be a bit of a challenge, especially during the summer months, to try to nurse some of these trades to their objectives. Jim says, yeah, like my 18-hour oil trade. Getting a possible trend change signal now to the short side. Not what I wanted to see, but let's see if the buyers recover it here one more time. Well, way to go, Jim. Jim says he was short at 91 with 5 contracts. So Jim shorted here, got down, got out with at the equivolume pivot. Good for you. So you scalped a few dollars out of that. No, looks like the buyers don't have enough to muster a significant rally. Come on, let's go. Don't make me pull out the mouse. So if the buyers press from here, that would be, excuse me, I got a frog in my throat this morning. If the buyers press from here, that would really be a good commitment. There we go. Come on. Keep going. Don't stop. Jim says, Eric, my median line is at 42.73. You have 42.68. I'm running my data at 24.5. Sometimes if you run your data at 24.7, it will calculate it ever so slightly differently. You should not be concerned, though, if the numbers are not 100% the same, because the lines do generate based on how your data is coming into your computer. In other words, even if we're a couple milliseconds off, or depending how your data provider segments the data, that may be enough to throw it off by a couple of ticks, but it's nothing to worry about, really. We tend to treat these more as zones instead of absolutes. Like sometimes it will hit the number bang on, as it did here. But, you know, because it fudged here by a couple, 3 ticks, does that mean that this line is not valid? No, of course not. All right, so let's see if we get... maybe I'll go to parabolics. We can watch. The parabolics tend to roll a little bit faster. If we can see the market move up here, you'll see how the trade manager can roll your stops. I think I have 10 days of data loaded as well. Hold on, I don't want to mess with that one because it's got a trade in play. Yeah, so I have 10 days of data. And my session template is default 24.5. Oh, looks like they backed up a little bit and tagged me on the parabolic. All right, but there you go anyways. That's how it works. Oh, what a humdrum kind of day. Just back and forth. No real follow through on any of the signals. Good day for the scalping. Well, actually, no. We're getting a lot of yellow bars. When you see yellow bars printing on more or less the same latitude in these little clusters like you see here, that's telling us that we have a pretty sideways market. We are producing a first micro-macro, almost a first micro-macro cross. There we go. Now the macro line's in sync. This is a high probability signal, but it is producing near the bottom end of the trading range, which means I gotta cover it way up there. And I gotta keep my fingers crossed that we're gonna see some follow through. Hey, thanks for stopping by, Alvin. We'll talk to you later. If you have any questions, don't hesitate to email. So here they are now at the bottom end of the range. Gotta get through those lows. Gotta take out a few of them buyers. Come on down. Let's see what else we got going. going on here? Oh, crude oil now falling off the map. So here's crude oil. So remember how I said after the inventory released, you could set a different range. You could up here, and you could sell below here, because that was the range of the inventory report. You could currently be short. If you were more aggressive, obviously you could have shorted through there also. Big decline. Let's see what we got here on the Raptor. Still just kind of sideways. You could. Here's the danger with sideways markets is you start to see things, right? You start to justify things. You could look at that and say, hey, that's a double pullback. I should sell that. Well, yes, no. It's not really a double pullback. Let me find you a good double pullback. Well, that was kind of tiny. Ah, here we go. This is a nice double pullback. This one's practically textbook double pullback. So the market comes into the hard edge, bounces out twice, comes out, produces a signal. That's a high probability signal that you can get on board. Compare that with this. Not exactly the same. And look at all the volume coming through here, though, off of the support. If this fails, we're going to get some follow through. We're going to trap some traders on the wrong side of their trades, and we're going to see them scramble. But first, we got to get through there. The longer they keep hitting that support, Tony's asking more of a measured move on the Raptor. Maybe. It depends what you're looking at for your measured move. Are you looking at, I suppose, this? There's one. Yeah, maybe. That's all you're getting. It's just one leg lower. Oh, they're trying. They're trying hard. We should be able to hit our high probability target here. The first micro macro cross, a very high probability signal. Problem with this signal is that I have to cover it way, way, way up here because there's not much else to base the trade on. But I'm not appreciating this lack of downward momentum either. Good question, Bo. Bo's asking, is crude oil inventory of 1.055 million an increase or a decrease to what was expected? Well, I would probably say it was an increase because the market did one of these. Right? So surplus inventory, greater than what was anticipated, down they go. Fundamentals are great, but they do take a while to learn, so that you can recognize certain values as being bullish or bearish. The rest of us just look at the chart and say, here's crude oil now on the hawk. We look at a chart and we say, oh, hey, there's a first micro macro cross. That's a high probability signal. I'll take it, and I'll have a pretty good idea it's going to get to my profit objective. Right, so after that, it becomes, well, where do you want to place your stops? Can I put them down here? There we go. And you scalp in and out with your profit. It takes a lot of dedication to become familiar with market fundamentals. A lot of reading, a lot of reading. I've known several very good fundamental traders in my time, but they were definitely market specialists. Tony just cut and paste the inventory results. I won't read them all to you, but you can find them online if you're interested. Well, thanks, Jim. Jim says, no, just forget about that. Just come here and listen and learn from me. Well, that's very nice of you, Jim. A lot of times, the thing about trading is all these bars, all these ticks higher and lower, that's real money being traded. That's real people putting their money where their mouth is, or at least the computer algorithm putting people's money where their mouth is. So, they have a definite opinion that the market is going higher or that the market is going lower. And I'm not liking this holding on the lows. See how we're holding on this morning's lows? I'm not liking that very much. If we get a buy signal here, that could be a soft edge buy on the Raptor. But the market really very, very sideways this morning. And when the market is sideways, just let it get outside that range. You're really just asking for it. All right, not much going on. Throw that one on the shelf. Didn't look at soybeans this morning, but we did get a decent trade out of the soybean market. Nice thing about soybeans, if you're looking for a way to kind of round out your portfolio or diversify it anyways, soybeans, they're normally active enough to produce some good signals, but the best thing about soybeans is once they pick a direction, they pretty much stick to it. So you can see a nice little rally there yesterday. Last couple days, not a good example, still kind of sideways. But we did get a hard edge bounce here and a green bar sell. So you could have set up your trade like that. And soybeans, well, not quite halfway to our profit objective. I think I may have to tighten that profit target a little bit. Not getting quite the follow through that we normally see. Summertime. And the trading ain't easy. Come on. to stick with these trades here. Jim's asking, I'm starting to use the IB and continuum time and sales data for block trades. What's the difference between the two? There shouldn't be. I mean, market data is market data. I'm using continuum now for my data feed, but I was using Kinetic just a few months ago. There shouldn't be any difference, really. Oh, that could be. Jim says, I think IB only shows IB trades because the block trades are totally different. Scoundrels. That's weird. I wouldn't have thought that they would be different like that. All right, guys and girls, if you have any questions, please type away. Otherwise, I think we may button up the room here this morning. There's not a whole lot going on. The market pretty much skewered here by our median line. We're still kind of stuck. So there's our median line on our support and resistance suite, and we're just kind of stuck right through the middle of it. Oh, Donnie says they do filter their trades at IB. Stinkers. Jim, nicely done. 6 oil trades up 157 ticks. Nicely done. You're very welcome, Tom. Tom says thanks for the explanations. Never be shy about asking, folks, because you can see on days like today, there's not much else to do but explain things. There's certainly not a lot of trades brewing. All right, well, we're going to button up the room then. Thank you very much for your attendance. We're going to have another open house next Wednesday if you'd like to join us then. And yeah, be careful. The market is stuck in a sideways range today. I do favor the bears ever so slightly, but I don't think we're going to see any huge moves during the afternoon. All right, you guys, we'll talk to you later. Bye for now.